Good morning. Good morning from San Diego. Hello, everyone. Good morning, Pedro. How are you?
Doing very well. How about you? How you doing?
Very, very good. Thank you. Pedro is in Miami. I am in San Diego today. Welcome, everybody, to Coffee Time with Marie Teresa CPA. Um, as you can see, my voice is a little bit gone. So I am in San Diego today because I have the honor of joining ADP board of advisors. And so last night we had a gala, and I was talking to so many people, awesome, awesome accountants, and we had such a great time. And so my voice is a little gone, but with that, so I really want to welcome everyone. Those of you who are returning to the show, welcome back. Those of you who are new, give us a thumbs up or a hands up in the chat so we know you are new. Always, I encourage you, everybody, please go ahead and subscribe, like the channel or the page that you are watching us on. We are going live every Thursday at 10 a.m. Eastern Time. Today, right now, it's 7 in San Diego, so I had to wake up super early for you guys. And so we go live on LinkedIn, YouTube, and Facebook. I am your host, Marie Terusen, CPA, and CPA. Um, I'm an experienced auditor and a CFO. As a CPA advisor and transformation coach, I use my proprietary and registered methodology, Valuation MT, to help business owners that have reached their first million to go to 10 million and more. I'm also a Grant Cardone licensee, and I coach businesses in sales, marketing, and finance as well. I'm an author of two books. I have The Complete Guide to Business Growth, which is available on Kindle. And I'm also going to be putting the link in the chat because I'm able to give you the PDF as well if you want to purchase. I also have an ebook called A Business Owner's Guide to Operational Accounting. One of the things that I'm working on right now is to create an e-course for Valuation MT. So those of you entrepreneurs that are looking to really learn about how to grow your business using my methodology, you could do that. It'll be available in the next week or so. So with that, I want to reintroduce my featured guest, my friend and tax colleague, Pedro Gonzalez, CPA.
Good
Hello.
morning. Good morning, everybody. Pedro Gonzalez, CPA, your business and tax strategist. We help our clients with their cash flow, improving their cash flow. Cash flow is lifeblood to any business, regardless of size and industry. Minimization, taxation erodes the wealth of your business and personal life.
Yes.
Exit strategies, because all of us will eventually exit. It just depends on how. So developing good, solid strategies to exit in a way that generates a strong cash flow, and number two, at the least taxing and the least taxing way.
Yes, absolutely.
Yeah.
We have Sarin, who's always joining us every show. Welcome back, Sarin. I really love having people around. And then if you are coming back to watch us or anytime you're here, please make sure to put some notes in the chat if you have questions. And so, just a quick summary of what we've covered in the past. And, we've talked really, really incredible information we've been giving out. We've talked about self employment, we've talked about tax rates, tax due dates, we've talked about tax planning. We actually did a full series on this. We've done partnership agreements, buy sell agreements, we've talked about entrepreneurial mindset, we've talked about employee tax retention credit, everything you can think of. So please make sure to go back and look at some of the other episodes if you haven't been with us. Last week we specifically talked about some of the mistakes that can really mistakes in tax that could really cause big problems, and that's something that was really great. Pedro gave us 10 different mistakes, so go back and check that one as well. And then today, we actually wanted to cover a couple of questions that came in. So we are super excited about this, and I'm going to actually read it right from the my phone. Um, Okay, so this was a question that came to me from a friend of mine, and he asked, I have a client, I'm not going to say where, that wants to sell his investment property and pick up another one. The problem is he's only owned this property for 18 months, and he wants to know if it's possible to do it as a 1031. Do you think it's possible to do a 1031 exchange on this? So here we go. Our questions coming in, and I love it. So we're gonna cover your questions. Send them in. So this was the first
Okay,
question we
very
want to
good.
cover.
Very good. Let's go. Let's give it. Let's give it a good stab on this
Let's
one.
do it.
Yeah, yeah. Well, let's see. 1031. Well, the short answer is yes. I mean, again, keep in mind that with the limited information I'm giving, the best understanding that we can provide to this question. But I like the fact that people are sending questions.
Yes.
But the short answer is yes. Now, the part of probably why the mention of the 18 months,
Mm.
and one of the concerns at the when the 1031, uh, when there used to be a section 1034 for the residential, when you sell the capital gains on sale of principal residence, used to be section 1034, and then it got changed to section 121. Now there was for principal residence, there's this limitation of the 2 years and five, the 24 months in a 60 month period. But there's no such thing really for section 1031. What happens is, okay, again, why the 18 months? Because it's probably that people have heard of when somebody starts flipping the properties too frequently, then you might become or consider to be you're kind of in the business of trade of selling properties. You know what I mean? So then, and in that case, the section 1031 will not qualify, meaning that by itself, that event that just happened will not preclude that person from doing it. But if this
Mhm.
person goes and the if this individual is flipping properties on a regular basis, uh, then it will not qualify.
Got
So
it.
I
So,
guess that's the short answer, based on just taking that one event and just simply
right.
just the fact that you sold it within the 18-month period by itself will not preclude you from doing it, as long as again it is actually an investment property, meaning that this individual in fact treated the property. And I think that
As an investment.
it mentions investment property, so if it is an investment property, then
Right.
there should not be any problem.
Got it. So the best thing in these cases is like, and it's great that you guys are sending questions, and we can only answer to a certain degree because we don't
Right.
know all the details.
Right.
So we can only answer to a certain degree. But then, the best thing is to always schedule time to discuss more details specifically to you. But yes, we love having those questions. Send those
Yeah.
questions.
Yeah, like you said, that we have within those limitations, we'll answer to the best possible. Now, I will still encourage this individual to, talk to the tax preparer, whomever is assisting them,
Right.
to potentially look any other potential issues that we're not aware of. You know what I mean?
Yes.
That could actually or might affect the transaction.
Yeah. Yeah, absolutely. Okay, so we had another question, and then we can just open up and we can talk whatever else. But so there's another question that came in that I want to read it out. Um, so this question was, and I'm just reading directly. The lady that she says, I just bought a car under my name for business purposes.
Okay.
Um, would you recommend some options to get my company to pay for it? That's question number one. There is some advice out there on about leasing my car to my company or maybe selling the car to my company. Can you give us some advice? So this is a very, very open-ended because this could have so many different situations. One of them being, you know, when you say business and it's a car specifically, But for business purpose, a car could, at the end of the day, we're going to end up using it a little bit personal, a little bit business. So it's not really going to be all business. Um, when we're talking about a business vehicle, it could be, I envision it more like it's a truck. It's something that you're actually going to use it for your business only.
Yeah.
For example, you are doing delivery, so you're purchasing this specific truck or whatever it is to do
Yeah.
delivery, and that is all you're doing back and forth.
Mhm.
Then you can do that. You can definitely have the business pay for the truck, and you're only doing delivery with that truck. When you have a car, but you're driving from your regular, let's say your home to your office, from your office to your client, or whatever else you're doing, it's always going to be somewhat of it.
Mhm.
It's going to be personal. So and it has a tax effect too, right, Pedro? Like it's not only just having the payment part, but it's also a tax situation as well.
Yeah. Yep. And that is why, again, you have to evaluate. I know there's a lot of information out there on the internet. Yeah, I mean, which is good and it's bad because unless you know how to discern it, how to apply it to yourself, people can
Right.
put themselves in trouble. Not to say that everything out there is wrong, is that you have to read it in the context of how it was written and
Right.
who was it addressed to, and then you need to be able to discern that, to extract information from that, but then okay, that applies, or how does it apply to me? So, with vehicles, the issue becomes is, as you said, it's not only that do you use it for business, because most people will say yes, I use it for business. Is how much, percentage
Right.
wise. I mean, what is the percentage of use of that vehicle? Now, some industries, for example, like you mentioned, the pickup truck. You own, let's say, for example, a pool cleaning business. So you
Right.
buy yourself a pickup truck, either new or used, and you use it to haul your cleaning equipment. You probably
Right.
have like a compressor, and you load that into your truck, and then to go on cleaning and whatever. So
Right.
I'm carrying my chemicals, whatever I need to do to clean the pools, and I use
Yes.
it to go from home to home as I do my assignments, and then I drop it back home, where then I unload, and then I have my potentially my second car where I then do
Right.
my errands. Now, it is also possible that in that case, that scenario, that the individual may stop at I don't know, at a Walmart and pick up something personal, but the mid is so minuscule that it's almost like
True.
it's not going to make a big impact on is this 100% or not. Now, the problem is when you see that uh, if he falls below 50%, then it's not, you're not going to find a lot of benefits. Might as well just get some miles out of that. So you want to reach a point where it's 50% or more to be into the, for example, section 179. You want to take bonus appreciation and so on.
Right. Right.
So
Exactly.
that's another thing. It's not only the business, what percentage are you using, and then even when you're below that 100%, then that means that there's an allocation that has to be made between personal and business. And how you're gonna determine that personal business is gonna be miles. That's why, regardless if you're gonna do business, actual expenses or mileage, you should track your
Hmm.
miles. Because mileage is going to determine then the use of that asset. It's going to be based on the total miles you drive, and compare that to how many miles I drive it for business. And so you're going to be required then to track those miles, which a lot of people don't do. And so
True.
a lot of people are guessing. I think in eventuality of an audit, there's no mileage log. So then how are you going
Right.
to prove it? Unless you have one or two places that you do on a regular basis. You only go to a warehouse where I pick up and drop off, and that's it. That's all of the use of this vehicle, is to go to a warehouse where I pick up some things and bring it to a smaller warehouse where then I retail it, for example. And so
Yeah.
the only thing I do is I go back and forth between those two places. Well, I do this 3 times a week, Marie, and it's 20 miles. I gotta go to Doral and go to my big warehouse in Doral, and it's so many miles to go over there, pick up my stuff, and bring it to, I don't know, Miami.
Yeah.
or whatever, for Lauderdale. So I drive to Doral, and then so I can tell you, Marie, that I do that 3 times a week. It is X a number of miles, 60 miles, I don't know, whatever. So 60 miles, 180 miles a week, multiply that by so many weeks a year. And based on that, I can tell you that's my annual mileage. Outside of that, uh, you will have a hard time proving in its totality. I mean, the business percentage, which
Right.
we
And then
require.
And then another thing you brought up earlier, because we were kind of, as we were discussing it, is the fact that, when it's the, let's say, the executive of a business, for example, and the car is being used by the executive, anything personal is going to become more of a benefit to them. It's an
Right.
income to them in a way. So that can create a kind of an additional problem, for the person,
Correct.
an reporting problem more than anything. 'Cause now you
Yeah.
have to report income for using the car.
Which again, I doubt that a lot of people are either aware or doing it. I mean, because again, you hear a lot about the deduction part, because that's
True.
what we're looking for. I mean, how can I deduct this? But if it's below the 100% use, and especially if it's a car that is going to be considered a corporate car,
Right.
that car, in essence, I'm deriving a benefit from that. I'm deriving a benefit by in essence, the company now is making it available to me as the executive of that executive employee shareholder of this corporation. So now I'm having use of that asset, but I'm also using it for personal.
Mm-hmm.
Well, that personal side is compensation. Now we talk about the 50%. So if you're a corporate asset, 50% business, 50% personal, you got to analyze and what that could claim your compensation and see if there's any here, because I will have to on this asset.
Right.
Would it make sense for me? A case, that's what you gotta take a case by case, things that you read on Google and say, oh, this, yes, usually company is a company asset. But then if I'm using it for personal and the company is part of my compensation. So as long as I do that, then I'm okay. But then you got to figure out does it make sense? Because now I have to pick up compensation in addition to my normal, I guess it will have to be added to the base of my compensation. You know what I mean? Not only my kind of my standard salary, but on top of that, it has some other benefit, and one of them being the car allowance.
Yeah. Yeah. Absolutely. And then in other situations, I know a prior client had this question to me at some point where you know they they're in the medical field and they asked me, can I just buy a a boat for myself and just put it for under the company. I'm like, so what's the business purpose for it? What are you going to do with it? I mean, you can buy it. You can buy
Yeah,
it for,
yeah,
but what are you going to do with it for business purposes? Like,
correct.
I'm like, are you going to take, patients out? Are you going to do retreats? Are you going to do something? Like, what's the business purpose
That
for
is
it?
exactly, exactly.
So
And
I think people get so like excited with all this information they get, but
yeah,
then
yeah,
at the end of the day, you always have to prove what is the business purpose of what you're doing with it.
correct.
Same with for example, some of the bigger business owners, when they have to travel so much, they end up buying a plane. Why do they buy the plane? They're not buying the plane for their personal vacations. They're buying the plane to do business, because while they're on the plane, they're still working.
Correct.
So it's all about the business purpose.
Exactly.
It has to be the business purpose behind it. And the tax deductions and all that, it's still going to have to be tracked. Everything is tracked for business purpose.
Yeah. No, that's
So
a good example that you brought up, the airplane, for example. And
yeah.
yeah, people look around and see these people, flashing their airplanes and all of that, your private jet and all of that. And but you have to, in essence, how do I make this to be deductible? You know what I mean?
Yeah.
So as long as you document that, most likely a lot of people have their private jet. It's not just to flash it on Facebook and Instagram. It's there is a benefit efficiency. Yeah, I mean, instead of
Right.
waiting in line and going through, it's just the efficiency of business because I need to go to point A to point B. And so I'm in Miami, I gotta be in Los Angeles. I can hop
Right.
on my private jet and end up in Los Angeles, get my meetings done, and then hop back on my plane and haul back to Miami so I can have dinner with my family and
Right.
at the
Exactly.
end of the day. So that is you can put there what I'm using for specific meetings. I'm not going, I'm using it to go skiing and unless again I can make it into a business trip. Yeah, I mean,
Right.
yeah, I'm going
Right.
to Vail, but I'm taking
Yes.
with me XYZ individuals where we're going to discuss business. We're going to see,
Right.
collaboration. That's a reason why we're going this time to Vail. So you have to find ways of how to legally how to make this into a business transaction.
Right. And then to give a different perspective of like how you can actually purchase an asset like that to do business with it. Like, for example, if you're purchasing a car to do Uber driving,
Hmm.
the majority of it is going to be used for doing business, right? So that, you're probably going to be 90% literally doing business with it. So you might want to purchase it under, let's say, a business name, an LLC or something like that.
Yeah.
But it's still going to have some personal usage. Just always think about that. Just don't worry about all these different thoughts and ideas put out there. It's always going you're just always going to have to prove the business purpose of it.
Hmm.
Yeah. And there's so many different ways of doing that. Let's say another example is just thinking through. Let's say you buy a boat, you want to charter the boat out. You put it under the business, and you charter a boat out. If or the same thing, you purchase a plane, you're a pilot, you purchase your own plane, and you just want to you know take people here and there. That's private jet. You can do that. You want to fly for yourself, you're going to have to pay yourself back. Maybe you charge yourself for your personal time of use, and instead of having income reported, you can just pay it back, kind of as if you used it from the business. So you become the customer of your business. There's different ways of doing it, just to make sure
Yeah.
you track it right.
Yeah, exactly. Just to make sure to you track the use of that
Yeah.
asset in this
Yeah.
vehicle, a plane, a boat, or whatever.
Yeah.
Um, I personally would not. I think in the message that you read mentions about leasing the car back to the.
Yeah. That's
I
weird.
personally would not. I have seen some of that, but to me, it defeats the purpose because you have to recognize income, and then there's a deduction on the other, so it washes. So
Yes.
where is really the benefit here? You see what I'm saying? I've seen that, and so I don't think the people are thinking through it. Like I have seen it also done with where people are saying, instead of the home office deduction, leasing or renting the space to your business. But again, you have to recognize rental income, and then the expense it washes. That doesn't make.
Yeah, it
Doesn't
doesn't. It
yeah,
doesn't. No, and it creates more work too. I mean, for the person tracking, you have to track all of this. You're gonna have to create what invoices to yourself, and then it's
yeah,
just
yeah.
it doesn't make sense to do all of that.
No, no, no. There's other ways to do it. You can deduct it through your company. But and again, like we were discussing, is making sure you documented the business purpose of this vehicle
Right.
and make sure that you have good record keeping of that, and based on that usage, then you get a derive a benefit from that. Otherwise, what you can do is simply track the miles,
Mhm.
do some kind of reimbursement based on the usage of your car, where you submit,
Right.
in essence, on a monthly basis, you submit your expense report. And within that, I include all of my expenses as a percentage of my use, and then ask the corporation, in essence, to reimburse me for those expenses, and then keep it clean, keep it
Keep it
documented.
clean.
Yeah.
Yes. Yes. I think there's just a lot of creative writers out there that are, just putting information out there, and there's just a lot easier and simpler way to keep things clean and auditable. You want to stay
Right.
focused on that. You want to make sure that whatever you're doing is definitely audit ready. And this is something we've talked about before.
Uh-huh.
All your record keeping, everything has to be done clean and audit ready, because if it anything, anytime they come after you, they don't want this complicated stuff. There,
No,
it's gonna
no, no. The
be big
IRS,
red flag.
I tell
Big red
people, the IRS is attracted to dirt. And what I mean by that is when it's messy. You know what I mean? They are attracted to that. So you want to keep it as clean as possible. Don't muddy the waters. Don't make it. You know what I mean? There, that's the last thing you want is to make it
flag.
too messy, too no. Yeah, keep it clean. For the miles, because I've been asked about that, is how to track it. In
Mm,
today's technology, we are blessed in a way that there's apps all over. I mean,
yes.
the one that I like is Mile IQ.
Yeah. Yeah. It's very easy to use.
It's
Hmm.
very easy to use. Provides up to me clean reports on that. Again, and it's very simple because then at the end of the year, I can generate a report, or I can send it to Marie. Here's my usage.
Yes.
I mean, it's done. And I think QuickBooks also has a
QuickBooks
tracking.
Self-Employed.
Okay.
QuickBooks Self-Employed does have that. It does track it.
Yeah.
And then if someone's using QuickBooks online, and you can just literally record it. Let's say if you're doing it, you can manually record it. I don't think it does the auto, but for the self-employed version, it does track it automatically.
Okay. So yeah,
Yeah,
there's,
it's like
there's
my life here.
multiple. Yeah. Yeah. So, but just ask. I mean, I know there's the same with the receipts, for example.
Yes.
Like for you're incurring going back to the use of your car, and you're incurring expenses on that car for business. Receipts. That nowadays there's apps out there that you scan the receipts.
Yes. Just send it in.
Done. I mean, and you can link a lot of them can be linked to your QuickBooks. I even QuickBooks also has their own uh,
Yes.
receipt scanning. That it takes it directly into your QuickBooks, so it simplifies your life, keeps it clean, and
Mhm.
you have your documentation right away.
Yeah, and you don't have to keep a box, a shoe
No,
box full of receipts.
no, please. Oh, no need for that anymore. The thing is that
More.
really is that we ought to be using the technology, the tools that we have available on our hands. So for the small business owner, simple apps like that, MyLIQ, is some sort of expense receipt scanning.
Yes.
You know what I mean? That's you. With that, you will not realize the amount of time and paper that you save because
Yeah.
when you're scanning those, it automatically goes into QuickBooks Online, and now your accountant can organize that and attach it to the specific places where it needs to be attached, and done.
Yep. Absolutely. Absolutely. So this was great. We are actually very close to the 30-minute mark, and I don't know, any last thoughts, Pedro? I think we've covered quite a lot with these two questions.
Yeah. I had a how much time we have left? I'll be brief
Yes,
on this
yes,
one. A
yeah.
few seconds in here. Well, a situation that occurred that somebody came to me with this scenario that I thought maybe to share, and that has to do with the contributions after you have taken it out of your IRA. That 60-day window. So let's say, for example, you have an IRA, traditional IRA. You took let's say 10,000. So you took 10,000 out. You have 60 days to put it back to prevent the penalties.
Mm-hmm.
Well, once the 60-day passes, and you go and let's say you didn't put the money back until day number 61. Okay, so you're late. Now, what happens is that now that contribution is considered excess contribution because it
Oh,
exceeds the limit. So something to keep in mind when you are looking into, you took money out of your traditional IRA and you are very close to the point of getting to that 60-day, you have to evaluate, you know, uh, to ensure that if you're very close, that it's going to be within the 60-day and not after, because once it crosses that, it's done. You cannot reverse it, and at that point, that those dollars are going to be considered excess contribution, which you also get a penalty for that. You get a penalty for taking it out and a penalty for excess contribution. So, anyway, something that, to share.
whew. Yeah.
to keep things
Very,
running.
very good. Very good. Thank you so much. That's a very good point. Thanks for sharing that. So with that, I mean, guys, it's 30, they're already 30 minutes, and we really want to be cognizant of, our audience's time. Everybody's busy. I'm very happy that you guys send us some questions. We are
Yes.
always ready to answer more questions. Feel free to send us via email or, at marie@marietorresioncpa.com. You can send me the questions, and I can we can answer them together here
Yeah.
at the next episodes. And of course, I always leave you guys with a quote from motivational speaker Jim Rohn. You are the average of the five people you spend the most time with. I hope we are the two of the five people you are spending your time with to learn and grow your business. So, with that, I wish you a wonderful rest of your week. And until next week, have a great one.
Okay. Take care.
Bye.